Too tired of stop loss. Did you share your trades with us, Hizar? You could share one of those. Let's see what's wrong with your stop losses. Yeah, that's good, Ethan. So just give me 1 second to start broadcasting this on YouTube and we will start. And we're live. Perfect. You came back from close to max loss. That's a good thing. Yeah, I would stop there as well, I think. Loved my CL trade. I will talk about it, definitely, if we have some time. I think we will. At least for now, we don't have a lot of trades. We'll see how it goes after. So let's start it. I'm getting my epic pen ready. Hello guys on YouTube, if you have any questions, feel free to ask. So Lenny traded Zoom and you took it to the long side right here. Did Zoom gap up today, gap down? Did it do anything significant? This is not today, this is 24th of April. Okay, I see that. I'm not sure what it did on 24th of April. I think that was still when it was on an uptrend. Zoom 24. Okay, I see this one. So by this day it still was green and it was still uptrending. So on the daily it was good, it was uptrending, and at the open it did around $8. Pulled back to view up, held view up. You took it to the long side as a bounce of view up, right, Lenny? I think that was it. I personally wouldn't have taken this setup to the long side. Why is that? Look at the 5-minute chart. So it went up all the way to 182 and the daily level which you had, and then it just bounced out of it, closing as sort of reverse hammer. If we didn't have this, I would call it a reverse hammer, but let's call it a doji, with a huge selling pressure on the top, right? The next thing, you did take it to the long side. Yes, it held, but only for 1 minute, right? It closed above view up. I wouldn't even call that it held view up, but still I wouldn't even take that thing to the long side because of this thing here. I would have just waited for a little bit of more confirmation. So you took it to the long side, managed to make it a winner closer to the highs right here, and then you exited at break even. Now notice what's happening. The high of the day, lower high. It tried to push back up to the high of the day, but it couldn't go to the high of the day. This is showing you weakness. You have a sign of weakness here. You have a sign of weakness here. It's making lower highs. And then you're taking it to the long side. I like that you took it on the new 1 minute high, but it wasn't strong enough by that moment. I would just wait for it to consolidate more or to break above the daily level before I consider taking it to the long side. I like that you respected your stop loss and you got out there. This long was good. Just didn't work out. So this was totally fine. Look at this. It dropped down all the way to a daily level, held the daily level, started going back up, squeezed all the way to view up. You could see here we're having some sort of level. There it is, right here. It does break it. You took it to the long side and not a bad stop right here. If I took this thing to the long here, my stop loss would be this level. Why is that? Because this is the level it actually bounced off. This is the first technical level we have. Now it's breaking up. You're taking it to the long side, doing a double top, second top lower than the first one. Perfect exit. I like that. So this trade was really good. It just didn't work out. I will definitely get back to the CCL trade. Let's see if we see some members here traded CCL. I will go back to it. If not, then I'll just talk about my CCL trade and my couple of other trades. So today I had 2 winners and 1 loser. I will talk about them all. Now, Codex, same thing, similar to what happened on CCL. No, sorry, not CCL. CCL is in my mind today. On Zoom. You see this? Yes, it's opening bullish all the way to the daily level, and then you're having this selling pressure right there. Now, this is not a bad long. I just would be considered of this week right here, but I like it. You see, it's weak, then it's getting back to green, and then a third candle which is green. I would call this 5-minute open range breakout or 10 minutes open range breakout. The 1 minute chart looking really good, bouncing off a daily level, doing a higher low wave, and then it's doing a closing as a hammer. You take it to the long side before the break or after the break. So yeah, this was good. Put your stop loss somewhere right here or somewhere right here, which is also good, and it failed. It wasn't the A plus setup, but this was a good setup. We just simply didn't work out, so it's totally fine. I like it here more. Why is that? Look at this. You had an engulfing candle, but it's respecting this moving average. It respected it for 5 minutes, 10 minutes, 15 minutes, closed as a doji above view up, starting to form some sort of a bull flag, and then it's breaking up. So yeah, here it would have been really good to try to take it to the long side. Here it was still stuck in the range, but yeah, this was good. This wasn't bad. Let's see your beyond trade. Now yeah, this wasn't really good. Can you guys tell me why this wasn't a great setup? There are many reasons not to take this setup to the long side. Moving average, lower highs, 5 minute looked bearish, the range, lots of resistance, lower high, below moving averages. So you see this just combined all those reasons together. M shape. You see there are a lot of reasons not to take this thing. First of all, it's forming a descending triangle setup to the short side. It's doing a lower high waves. Yes, this is a higher low wave, but then it's doing again a lower high wave. It's doing a bullish engulfing sandwich right here. A setup to the short side, bunch of resistance. It's below view up. Thank you, Antonio. So Adrian. And it's weak. Yeah, exactly. See, there are a lot of reasons not to take it. And I think in the pre-market it was strong. I remember this yesterday. I was also long bias on Beyond, and I wanted to trade it to the long side because I mean the daily looked good to the long side, the pre-market looked good to the long side. The opening was strong, but look at this, it's not strong anymore. Now it's just dropping back down. There was no reason to take it to the long side. I'm seeing some reasons to take it. Give us those then. Let's hear those as well. Now look at this, guys. If I wanted to take it to the long side, I would have waited for it to break this area right here. Once it breaks it, you'll have tight stop loss. I mean, $1.50 on Beyond. This is not a lot of room. You could take that, put your stop loss at $1.50, and then just get your 2 Rs at the high of the day. Recent high, prior the high, hammer right before the entry, and above the Dell's honor and not breaking. Okay, see that. So these are the reasons then want to take it to the long side. You have the daily levels, which it couldn't touch. It's making a higher lows right here, and he has this hammer right here to take it to the long side. Only negative is that it's below view up. Okay, now that's good. It's good to see also reasons to take it to the long side. So you have a pennant right here, right? It could simply break up, could simply break down, but because it's below the moving averages and it's below view up, it's still looking a little bit bearish. How do I love to trade those? Either it breaks to the downside, pulls back and continues, or breaks to the upside, pulls back and continues. There are exceptions where I don't take it, where I don't wait for the pullback. Like in this case on Beyond, if it breaks up, I will not wait for a pullback. Why is that? Because as I said, it will be only $1.50 stop loss. I could go with that. Just take it to the long side once it breaks. If I'm long biased on it, put my stop loss at $1.50, and the next resistance you have is at the high of the day, which is 2 Rs. That's totally good for me. If this pennant was so wide, like this, somewhere right here, and the stop loss would have been $2.50, let's say, I wouldn't take it right at the break, because $2.50, it's too much for a stop loss in these type of stocks. And I would usually wait for a pullback before taking it to the long side. Thank you, Zen. LUV. Now this is one of the stocks I usually don't trade. Not stocks, I mean setups. I see that you took it for the break of this moving average. Am I right, Lenny? Is Lenny here? So why wouldn't I take this thing to the long side? And guys, let me know, why would you take it and why wouldn't you take it? I see the reasons to take it, which are good. There is only one reason which I don't like. Two, actually. Exactly, that's one of the main reasons I wouldn't take it, Ryan. Someone else? Let me show you guys, it doesn't look bad. If you look at it this way, let me get it, I can't get it back, like this way, you see it's bullish, right? It's looking so good, there are reasons to take it. But then looking at the 5-minute chart, let's get back to the 5-minute chart. Right here, it's still looking bullish, like it will break out. But there are still stuff I don't really like look at this, this is it. You are taking it to the long side right here. Or maybe you are thinking about taking it to the long side. What would be your reasons not to take it or just to take it? Where would you put your stop loss, guys? Let me just zoom it out. What would be your stop loss here? Let's start from that, yeah. Okay, the news on love was bad. Could be a reason. Low, J-Bone would put the stop loss at the low of the 5-minute candle right here, right? J-Bone? $29.13, yeah, exactly, that's the low of the 5-minute chart. I like this stop loss. The moving average below the candle, this would be our stop loss, David? Yeah, it's really tight, but could go, yeah. If you go in right for the breakout, why not? Yeah, personally, if I take it to the long side, I would just put it as well at the new 5-minute low. But then I would think about this. The stock is just going up. Now look at this move from 28.50 to 29.50. $1 move with no pullbacks. No pullbacks at all. And stocks do pullbacks, right? It will not just go $3, $4, $5 with no pullback. Especially on $30 stock. Like $2 or $3, this is 10% of the stock price, right? This is too much. So first of all, it's going up with no pullbacks. If I want to take it to the long side for the breakout, this I could use this as stop loss, but this is not a technical stop loss. This is just to give it some room. If it's continuing to uptrend, it will do higher highs and higher lows. And once it does a new 5-minute low, I could expect it to go all the way down here, do a higher low wave, and then go back up. I definitely will not give it a $1 room and then aim for a $2 room on this stock. So definitely not the best stop loss. If I take it for a scalp, that would be my stop loss. But look at this. It already moved a lot. Traders will take profit at some point, right? And where would you take profit if you are here, guys? If you took it to the long side here or here, what would be your target? 29.50 level. Raju will take target here. Ash will take 29.30 at the moving average. J-Bone will take target at the high of the pre-market. All of them are good targets at the pre-market high. Amazing. So look at this, guys. If you take it to the long side here and put your stop loss down here at the new 5-minute low, would this be a really good risk to reward? It's even less than 1-to-1, or maybe 1-to-1 or less than 1-to-1. So exactly, I don't like the risk to reward on this thing, and I don't like that it didn't do a pullback yet. I know that if I get in here, I'm chasing, and there will be traders. Look at this. It's just touching the daily level and it's bouncing. It could bounce off the daily level, it could bounce off the pre-market high, and I know I'm getting in late. That would be a good reason for me not to take it there. Exactly, Bal. You have reasons to take it, and that's it. Remember, when we are taking a trade, we should always have 3 things in mind: an entry point, stop loss, and a profit target. That's for trade management, right? And your stop loss and target should be reasonable. First of all, reasonable, and second of all, profitable. At least 2-to-1 or at least 1-to-1 if you have more than 50% win rate. If you don't have those, you have a good setup, you have the entry, you have the stop loss, but you don't have the target, just avoid this setup. Robertus would go long after breaking the previous highs level. Robertus, is this it? I mean, this is not bad for the pre-market breakout to take it to the long side, but same, this is a huge move. To take it for the breakout, it would be like late. I would wait for it to break out, pull back, and then break out again. We should always have technical stop loss just to have a good risk to reward. No, Raj, I don't think of the reasons not to trade. I try to go for the risk to reward most of the time. I wouldn't call this a pullback right here. Look at this. Look at the 5-minute chart. Higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. Inside the 5-minute candle, you could have 1-minute candles which are going up and then going down and then going up. But this wouldn't be a pullback. This here, it could be a pullback. If you take it to the long side here, it's not bad. Why is that? Dropped all the way to the daily level, came back up, pulled back, right? Closed as a hammer. You either take it to the long side here, you take it at the breakout, put your stop loss down here, and then you have a little bit more room. But now here, this is already late. Like if this was the entry, yes, this is the pullback here. But you don't take it to the long side way up there because it pulled back 10 or 15 minutes ago. So Daniel, right? Is this Daniel's trade? Yes, it is Daniel. Let's see what you did there. You trade Starbucks, and this is the same thing. Was this short or long? It was short. Okay, for a short, it's not bad. It's going up, but it's not so extended, right? This is just the beginning of the move. Around here, a short would have been good. And this is really strong. Is this today or yesterday? How did I miss this? I didn't see this. This is a clear ABCD pattern, right, guys? Going up, consolidating around the 9 moving average. I love the wicks down here. I love the dojis. New 5-minute high. Really tight stop loss, and then it runs. This was a really good long. Yeah, this is amazing long. Like 20 cents stop loss, and you get 5 hours all the way to 78. Yeah, this was amazing. Yeah, so looking at this now, here it's starting to go up, it's starting to get extended, but it's still not so extended. Look at this. This is around 20 or 30 cents down there, right? And if you take it to the to the short side down here, 65 with a stop loss at 80, it would be around 15 cents stop loss. Your target is 2 hours, which is double of it. And on parabolic reversals, I personally don't go for less than 4 hours, like 3 hours at least, but not less than 4 hours. I could partial sometimes on parabolic reversals at 2 hours. I do that sometimes if I don't like the price action, if I see something on the level 2, if I see that it's resisting something. But yeah, other than that, how did it look on the 1-minute chart? I mean, if on the 1-minute chart you had 2 shooting stars, let's say, or 2 dojis, and then you take it to the short side, that could be enough of a reason. But if the 1-minute chart was a bullish candle, then it got engulfed by bearish candle, I don't like these type of patterns. I'll go over my parabolic reversal, which I've taken today, which didn't work out. After we're done here. So Ethan, let's see, BBY. Now this is not bad. Yeah, this is not bad actually. Went up, got engulfed, which is a bad sign, but then it's starting to go to the long side. I love the small 1-minute candles consolidating. You take it to the long side for the breakout, put your stop loss at a new 1-minute low, or you just give it some room down there. I think you just had a really tight stop loss, new 1-minute low, and you went for a breakout. You took a partial at the breakout and you got stopped out. That was it, right? Wasn't bad at all. I really like this one. I would have re-entered, I think, right here. You have a small ascending triangle right there. You have a 5-minute opportunity breakout. It's breaking the pre-market level. Yeah, not a bad place to re-enter actually. Now this I wouldn't have taken it to the long side here. Look at this drop. This is a huge drop right there, right? Then it's trying to come back up. It's dropping down. It's doing, yes, the W shape right there, but this is so small for a W shape. Look at the 5-minute chart, engulfing, right? When I go for parabolic pullbacks on an ABCD pattern, I don't want to have an engulfing on the 5-minute chart. I want to see it pulling back, yes, parabolic pullback, but at least 2 or 3 candles, one after another. Then it's starting to go up. I could see a W shape on the 1 minute chart, or I would prefer, of course, to see a W shape on the 5 minute chart. But when I see an engulfing, I forget about the ABCD pattern. I just wait for it to do something more, to consolidate more, or to show me some sort of other setup. Here it did engulf totally. It just eliminated the move. Yes, it did the W shape on the 1 minute chart, but this is not an ABCD pattern. This was just a dump, an engulfing, not an ABCD pattern anymore. If it breaks above this area, or above this area at least, that would be good. Like here, I would wait for it to break above this area before I take it to the long side. If it's breaking above this area with waves, I would take it at the breakout and put my stop loss below one of the waves. If it just simply goes up and breaks it, it would be just gone without me. So think about it this way. Sometimes you see some sort of setup, you are biased to some direction, you see the confirmations to take to the long side, like your plan is to take it above this level, but you have your entry, right here you have the entry, which is one of the conditions to take trade. You have your target, let's say the high of the day. Now you need to have your stop loss and to have a good risk to reward. If it simply goes up and breaks this, you got your plan, you take it to the long side, but what's your stop loss? Right here, that's bad. Not a good risk to reward. Avoid the trade. Yes, eventually it's working out, it's doing your plan, but the risk to reward wasn't there. If it went up, not like this, so this is your entry, this is your target, and it's going up in waves, it's breaking up, you could entry, target, stop loss, right? Now you have the risk to reward. So everything is there. Entry, target, stop loss, and risk to reward. That's where you take the trade. So basically it's the same idea. You wait for a breakout and then you take it to the long side. But the difference is how it's getting to your entry. Is it just doing a huge 1 minute candle, breaking through that target and missing your risk to reward? Or it's getting there slowly, giving you a proper stop loss? So yeah, the short was good. I think this was a short. It started doing a descending triangle right there. Took it to the short side at the breakout, partialed all the way down there. So yeah, I love this short. And you held it. That was amazing. Good job. Someone is calling something on CCL. Let's quickly take a look at CCL. Yeah, this is just late now. If you got in there when it was far from the 9, the 5, 2 dojis, selling wicks right there, not a bad short right here, that would have been perfect. But here it's just already late to take it to the short side. Let me see. What stock were we reviewing? Okay, let's see NVDA, Daniel. You took it to the short side there. Now look at this. I think you waited for a new 2 minute low or new 1 minute low. It was extended from the 9 moving average and the 5 minute chart. But you see this? This is where I don't take these type of setups. Engulfing, like white bar candle on the 1 minute chart, and engulfing on the 2 minute chart. And then a new low. These type of shorts and these parabolic reversals I usually avoid. I want to see shooting stars on the top or dojis on the 1 minute chart. That's what I love to see. Or at least small bar candles on the 1 minute chart with small wicks above them. Those are my entry candles. Other than that, I just try to avoid it. And remember, stocks, a lot of times on those parabolic reversals, they go to the 9 on the 1 minute chart for fares and then they bounce out of them. If they bounce, I really don't like them a lot. They usually get me stopped out. Sometimes they do a lower high and then drop down, but a lot of times when they are bouncing, they're just getting me stopped out. So as much as possible, I try to avoid getting in closer to the 9 moving average in the 1 minute chart, because I'm just getting in right against it, especially if there are no good candles. If I see two good looking candles right here, yes, it's close to the 9 moving average in the 1 minute chart, then a new low literally into the 9, I might risk it. I like the candles, it's extended, I have the good risk to reward, let me just try it. But if I see one, something I don't like here, two, close to the 9 moving average in the 1 minute chart, like it's not the perfect setup for me. I just try to avoid it. Long right here wasn't so bad. Steady pullback, forming an ABCD pattern, doing a W shape on the 1 minute chart. You try to take it to the long side. You have wicks right here, wicks right here. Tried it. It tried to break out and then it got you stopped out at the C. One thing though, I would have exited here either at break even or before my stop loss. And guys, who would tell me why would I, or if you are thinking the same, why would you get stopped out on these type of trades at break even or before your stop loss? Right here. The doji, the 3 indecision candles can't break the range. Yes, exactly. Daniel and Brad and Ryan. I like that. So look at this. You see here, it did break out this area right here. It did make a new 5-minute high. And once the stock does a breakout, it either immediately runs or it just runs a little bit, pulls back, and then continues running. But if it's breaking out, faking longs into getting into this trade, and then just it immediately closes as a reverse hammer, that's a bad sign. I might just hold a little bit into it, but once it does a new 1-minute low after that, that's a bad sign. This is a pattern failure. The setup here just failed. Now it's making a new 5-minute low. Just exit either at break even once it does a new 1-minute low or a little bit below it. Didn't make a new 1-minute doji immediately. Here I don't care about this doji. This is totally fine. Like, you get inside the range. You have the high of the range here. You have the low of the range here. And I like what Daniel did. You see what he did? He got in the middle of the range. He didn't buy into the resistance. He didn't short into the support. He got in the middle, put his stop loss at the low, and waited for some sort of target. It did break up above the range, which is good, but it immediately got sold off into the range and did a new 1-minute low. Like, because of these two candles right here, I wouldn't hold the stop loss there. Yes, at the entering here or at the time of entering, this was the best stop loss, but we continue analyzing the price action, and after we see this, there is no reason to just hold on to it, and we could just simply build on it a little bit earlier. So let's see what else we have. Dan now. What did you do, Dan? JPM tried it to the short side for a parabolic reversal, I see. Now let's see what we had there. Okay, this is not bad. It just started the move, and one thing I noticed about this, and guys, this I'm still working on. So those are just my notes in it. They are not working 100% of times. When the stock is consolidating in a range or doing an ascending triangle or an ABCD pattern and it breaks out a lot, like for a huge move, not a small move. There is difference, small move and a huge move. If it does a small move and it's extended from the non-moving average in the 5-minute chart and does a new low, that's a good place to take it to the short side and go even inside the range. But if it breaks out the range or breaks out the ABCD pattern or ascending triangle and it makes a huge move, look at this. This is here, this is here, and it does a double move of this previous range. It's showing that this stock is strong. And the first pullback for parabolic reversals usually fail. The second usually works, but here I see that even the second didn't work. The first I'm usually cautious about taking. So even if it does a good looking 2-minute candle and it's extended a little bit from the non-moving average in the 5-minute chart after a strong pullback, I avoid taking it. The second though, and this was amazing, 2 dojis so far from the non-moving average on the 2-minute chart and far from the non-moving average on the 5-minute chart. It's so extended. New 2-minute low. This setup 100%, if I saw this, I would take it. But this just fails. This I wouldn't take it. And let me guys show you a trade my trading buddy did today. It's just perfect to illustrate something. We'll actually see 2 things there. This is a trade from today. Let me quickly download it. So this is a trade my trading buddy did today on MU. Wait, did I just close YouTube? That's bad. Guys, okay, that's bad. Let me quickly open the stream on YouTube. Andrew. Okay, we're back to YouTube. So look at these guys. Wait, not this one. Downloads. And I'm opening the picture again. Perfect. So look at this. This is MU. This is from today. It was so strong. You see this? This is so strong. Now, what do you see here, guys? Sort of an ABCD pattern, right? And look at this. What is happening here? A breakout. But this breakout is so small. You see this? This is the high of the range. It's breaking out, but it doesn't run a lot. Only 10 or 15 or 20 cents. Then you could see on the 5-minute chart, it is still extended from the 9-moving average on the 5-minute chart. He takes it even before a new 2-minute low because he sees, you can't see. Let me zoom it in. Is this better, guys? So look at this, it's going up. This is more of a bull flag pattern right here. You have a bearish engulfing sandwich, and by the way, guys, bearish engulfing sandwich is a bullish setup, and bullish engulfing sandwich is a bearish setup. But there it is. You see, 1, 2, 3. Buyers, sellers, buyers. Buyers 1, weak. Take it to the long side. Stop loss below the week. This is how I usually trade it. And look at this small breakout. It doesn't run. It's different between. Let me see the previous trade. There is a difference between this one and this one. On JPM, you see the breakout? It's huge. If you compare it to the range, it's huge. Now this, I wouldn't take it to the short side. On MU, you see that the breakout is weak. It did an initial strong move. The breakout happens, but the breakout is weak. You could see weakness even from the breakout, even before the new low. The breakout wasn't so strong. It just broke out on this 2-minute candle, and 1 minute after, it does a doji. This is a weak sign right there. Then a new 2-minute low right there, or a new 1-minute low right there. Even no new 2-minute low. That's an amazing entry. With a target of the 9-moving average on the 5-minute chart. And you see what happened then? It did a head and shoulders on the 1-minute chart, head and shoulders on the 2-minute chart, breaking the neckline point, and it just dumps. Do you see the difference now, guys? Another thing, guys. Yeah, I forgot about one more thing. ABCD pattern. Some people, I know, they would take this trade to the long side here. They would assume that this is a W-shaped pattern on a strong stock. But it's not like that. Why is that? This is the reason. It's not strong anymore. It was strong. It did, if it broke out nicely and then it pulled back and did the new high like the second bottom, this is W shape, this is a good entry right there. But it's breaking out and getting back into the range and trying to break out again. This is the beginning of formation of a head and shoulder setup. It's not interesting to the long side anymore there. Morales Picky, do you want us to review some CCL trade, or you want us to see what CCL is doing right now? So to confirm, bullish sandwich is to the short side and vice versa. Yes, exactly, Han. I'll try to do that today, Ryan. Thanks for the advice, definitely. So let's see. Okay, guys, we need to go a little bit faster. Actually, we have enough time. I think we have time. Yeah, let's see. So ENPH, you try to take it to the short side, and this is the same thing. Yes, it's actually not so extended from the 9-moving average in the 5-minute chart. If you look at this, it's somewhere around 42.40, right? 42.40. If you take it to the short side at 42.80, put your stop loss at 43, even 10. It's 30 cent stop loss, and there is no risk to reward between the breakout right here, or between your entry and the 9-moving average on the 5-minute chart. So yeah, the risk to reward isn't there. This is the first thing. The second thing is these candles right here. I don't like them. Like the entry should be on the next one exactly. You see a good looking 2-minute candle, let's say shooting star or doji, and then new low. That's where you take it to the long side. But once it starts consolidating in a range and then does new lows, I don't really like it. It should be quick. Let me show you one of the trades I've taken today on JD. It was a parabolic reversal which didn't work out. Unfortunately, it didn't work out, but then I'll show you how it worked out a little bit after. So this is my JD today. This was around 10:30. JD at 10:30, and that's it. So look at this. It did a few fake outs, right? You see here a new 2-minute high, here a new 2-minute high. Why didn't I like those 2-minute highs? Let me just zoom it in a little bit. First of all, if you look at the move right there, you see the difference between the non-moving average and the 5-minute chart. It's steady. It's not going parabolically. It's dropping down. It is a little bit, it has a gap between the entry and the non-moving average and the 5-minute, but the 5-minute chart, but it's still not extended. And one of the keys in this setup, if you want to pay attention closely to it, is the volume. I love to see climactic volumes. Once I see that the volume is starting to increase, similar to what happened right there, and look at this, 3 dojis, you see the volume? A little bit above it, higher. Increasing volume, new 1-minute high, that's where I took it to the long side, put my stop loss at 4 cents, partial at 2 hours. Why did I partial there? I noticed that it was following the SPY, and the SPY at that moment, where is the 10:30? Look at this here. It was literally hugging the 9-moving average in the 1-minute chart, forming some sort of descending triangle right here. Once I saw that it was following it, and it was forming a descending triangle there, I just decided to take a partial and exited the rest at break even. Why did I exit at break even? Because the SPY broke the low. The SPY broke the low. I thought it would go lower, and I just held on to it. Now look at JD here. Where is it? There it is. You could see new 2-minute highs here, right? There is a new 2-minute high at 10:44. Where is 10:44 here? There it is, 10:44, 10:45. What are the candles here? This is the candles I don't like. This is the candle I don't like. An engulfing after an engulfing. A red candle after a white candle. What do I want to see? I want to see dojis and hammers. I want to see the dojis on the 1-minute chart forming a hammer on the 2-minute chart, and that's what happened here. You take it to the long side on your 2-minute high, on a new 1-minute high right here, and then you just go for a target of the 9-moving average on the 5-minute chart. Is this better now? Clear, more clear on the parabolic reversals? No, Lizzy Bis, I am from Russia. Okay, that's perfect. How can I access the previous classes? The previous classes are on YouTube. All of them are recorded and they are posted on YouTube. So J-Bone, let's see what you did there. Let's open both of your trades and go through them both. Oxy. Now this was good. This is better for parabolic reversal. On the 5-minute chart, it's enough extended from the 9-moving average in the 5-minute chart. You have sort of a doji on the 1-minute chart, then a hammer on the 1-minute chart, and then you could take it to the long side even before the new 2-minute high. So this is one of the exceptions. White bar candle, and look at these guys, the volume, climactic volume. It's starting to get an increasing volume. I love these on these type of setups. Then you are having 2 good looking 1-minute candles, one of the exceptions, not always 2-minute high, either 2 good looking 1-minute candles, or a new 2-minute high with a good looking 2-minute candle, or a white bar candle on the 1-minute chart with a small candle inside it. And exactly, I will show you another setup from today. I didn't take it, I missed it, but we'll go to it now. So this was a good entry, a little bit late. I would love to get an earlier entry right here, but still a good entry. Just tighten your stop loss. You don't need to put it at the low of the day, just give it some room, because when these setups work out, they work out immediately. So this was perfect, J-Bone. AMD. So you took this thing to the long side and put your stop loss below the doji. I like that you put it below the doji. That's more than enough for it. You would have been subbed out a little bit after. What I don't like is the move. Look at this. Huge move with no pullbacks. Once it breaks down, does a new 2-minute low. Where is the 5-minute chart actually? Yeah, actually it is a 5-minute open range breakout. Yeah, this is not bad. You have a 5-minute open range breakout, above view up, took it to the long side, got stopped out, then you tried it one more time. There are just a little bit of tight stop losses there, right? Inside the 5-minute candle. If I took it to the long side where you took it to the long side, based on this setup right here, I would put my stop loss below the body right there. It will be only 10 or 15 cents stop loss, right? So it's just a tight stop loss there. Let me show you one thing here. Now this was perfect. I'm actually really mad at myself. I missed this setup today. MGM. It was on the 1-minute chart and it was so perfect. Look at these guys. You see this 10:05? I was in my trading buddy trading together. We saw this happening. You see, dropping down, dropping down, dropping down, steady downtrend. And when I see something dropping like this, if I take it to the short side here or here, what will be my first target to take it to the short side? No daily levels on the way, right? How do we do this? We either partial at round numbers, which 1550, right? Or we wait for new highs. Just hold until you see a new 1-minute high. And what do you have there? Slightly wide bar candle with a small bar candle inside it. You take it to the long side, have 3 or 4 cent stop loss, and then just go for the target, the 9-moving average on the 5-minute chart. This was so clear and so good right there. Look at this, no new 2-minute high, yes. But what do we have? We have an exception. Slightly wide bar candle. Inside it, small white candle, a small bar candle, extended from the 9-moving average in the 5-minute chart. You take it to the long side, and then it just goes. I did exactly the same trade on Oxy, but entered at the new 1-minute high. Yeah, that would have been a good entry, Lou. You managed it well. What about MGM at 11 o'clock? Volume is an indicator, Valentin. If you have the volume, that's perfect. You get more confirmations before you get into the setup. If you don't, you need other confirmations. So you have a lot of rules. Extended from the 9 on the 5-minute chart. You have wide bar candles inside its small 1-minute candle, or doji, which is a good looking 1-minute candle. New 1-minute high. The volume isn't there, but you can't have like 5 out of 5. If you want to go for setups which have all the rules in it, that's perfect. You'll just increase your win rate. Yes, you will miss some good setups, but it's even better if you are that disciplined. That's why you have A setups, we have A plus setups, we have B setups, we have C setups, or even bad setup, or some stuff which are not setups, right? MGM at 11 o'clock. Let's see that. This is good. Look at this. Weak. Doji, doji, doji. Buying pressure, buying pressure, buying pressure. Was it extended from the 9 on the 5-minute chart by 11? One rule I don't like, but if this is the target, it's good. You take it to the long side there, you have a good looking 2-minute candle right there, you take it to the long side, put your stop loss at 7 or 9 cents right there, and then go for the 9-moving average on the 5-minute chart. One of the rules which I don't do, which I have for not taking the setup, is having a horizontal moving average on the way. So if MGM is dropping and I have a 200 moving average right here, not here, this is good, this is moving average right here, it could have been a target. But let's say it's here. If it's here, it's doing this exact same setup. This here, I like that so much. But I have a 200 moving average in the way, right here. Horizontal 200 moving average. I wouldn't take it only because of this moving average. I noticed that they bounce to it and then drop down. It fails more than it works. If it's not there, then I would take it. But here, the moving average was so far, you could just use it as a target. And Lou, do you usually trade this setup? I would love to see some of your trades, Lou. If you could email them to me, I'll type my email. I'm just interested how you take these type of setups. Yes, Yardley. Not old. I started recording them for like, I don't know, a month or a month and a half ago. So they'll be there. So let's see what hand did. Other time frames. I don't like any 200 moving average. Not on the 1-minute chart, 2-minute chart, 5-minute chart, 15-minute chart. If there is horizontal moving average in the way, similar to this one. Now look at these guys. This is getting extended there, right? You see, it's not so extended, but it's starting to get extended here. And you have 200 moving average on the way right here. Like it's somewhere, where is it? It's somewhere here. I wouldn't take this thing to the long side with that moving average right there. Now let's see what you did. You tried to take it to the short. This was a good short. I like it. So it's dropping down. This short wasn't bad as well. You see it weakening from there. It's dropping below VWAP, below the moving average. You take it to the short side. Really tight stop loss, start partialing, not bad. Dropping down, pulling back, forming a descending triangle on the 5 minute. Actually, I thought that this was it, but yeah, I think it was. Yeah, this was it actually. This is it here, right? Yeah. 10, 10. 10, 10. It's here, yeah. Okay, it's dropping down, pulling back to the 9 moving average in the 5 minute chart. Look at this. Curling down, took it to the short side, didn't respect your stop loss, or I think you had your stop loss and it got triggered, not bad. If it wicked above it, still was a good step, good stop loss right here. It just didn't work out. Broke down the range, this is the range right there, took it to the short side one more time, a little bit early partial, but still was a good one, and you held it all the way down there. So yeah, this was a really good one. When you say horizontal MA, do you mean the 200 ml level from the daily chart? No, Fig, not from the daily chart. Like here, there is it. It's not literally horizontal, but it's sort of horizontal. Would I take it to the long side here on a new 2 minute high when I have this on the way? No, I don't do that, because usually they go back to the 200 and then they drop down. I don't like when I have a 200 on the way, whether it's the 2 minute chart, the 5 minute chart, the daily chart, or whatever there. But still, good job, Han. Robinson traded CCL. Not a bad one. I like this one. So it dropped down right there all the way to 1370, pull back up, sort of a flag right there. You could see a range right here. Take it to the long side at the breakout of the range, or a little bit below before the breakout of the range. Put your stop loss somewhere right there. I think you had a really tight stop loss because you partial there, but this would be my stop loss personally if I took it to the long side on a new 5 minute high and then partial on the way up. I think you exited all out there. Went up, pulled back, and you took it on a new 5 minute high to the long side. This I wouldn't have done. I wouldn't have taken this thing. Why is that? 2 dojis on the 5 minute chart. Up there, this is really weak. It's dropping down. It's starting to come back up right there. New 2 minute high. It still worked out. I see, and it got all the way to the high of the day and above. But personally, I wouldn't take it. But still, this was a good setup. Not a horrible setup. Not a C setup, and not a perfect setup as well. But it was good enough, and I like your entry on a new 5 minute high. You didn't take it on the way down when it was doing lower lows and lower highs. You waited for the confirmation, took it on a new 5 minute high to the long side, and you partialed at the daily level. Strategy long ABCD pattern stops break of view up on the 2 minute chart. So when you took it to the long side here, your stop was the view up, right? I personally, I mean, the entry isn't bad at a new 5 minute high, but view up was really tight off a stop loss. I would have given it at least the low of the body of the 5 minute chart, at least the new 2 minute low, because it could simply open the next candle, drop down, not form a new 2 minute low, but it could drop down, it could break below view up. This was a really tight stop loss right there. Thank you, Lou. I really appreciate that. Let me actually share my CCL trade now, since we're talking about CCL. I took this thing to the long side today. Let me get back there. There it is. There it is. There it is. And there it is. And guys, can you tell me why I've taken it to the long side? Hope this is well or visible. And what was my stop loss in this thing? Or what would be your stop loss in this thing? Doji, big hammer in the 5 minute chart. Hit a level and wicked up. And buying pressure. High ending volume. 1370 to 1366. That would be our stop loss. Bounce of the previous day close. And that 100. So look at this, guys. You see CCL? You see this range right here on the daily? It's been stuck in this range for almost a month, right? 3 weeks, somewhere around that. It was just chopping around that range. And today, look at this. It gapped up all the way above this wick right here, the high of the range. What happened today? Today it opened sort of strong, and then it just immediately dropped down right there. Dropped all the way down to 1370, right? 1365, somewhere there. And held the daily level, held the moving average. And look, what do we have here? We have buying pressure here. We're having buying pressure here on the 1 minute chart. A hammer right there. Then, after this hammer, I told myself, either it makes a new high and it goes up, or it makes a new low and it can just either drop all the way back to these daily levels right there, and maybe after that it will go up. What did I see? I saw that this candle at the beginning, it was red. You see here, it was red. It dropped all the way down here. It was forming a sort of new 1 minute low, and then it got bought back up, did a new 1 minute high. My entry here, my stop loss here. This was my stop loss, the low of the week, 5 cents. Partial first at 1390, which is 2 hours. Why did I partial here? I don't like horizontal moving averages on the way. I still believed it will be strong looking at the daily level and how it gapped up, looking at the pre-market levels. And I told myself, if it breaks above those moving averages, it will be strong. But I ended up doing one bad thing, over partialing. I partialed each 1 hour. 2 hours, 3 hours, 4 hours, 5 hours, 7 hours, and I just partialed each 5 cents, which was bad. This partialing here is something I did bad. I shouldn't have done that. This partial, I don't think it was bad. But these partials, there was no reason to partial. Those 3 here. It already broke above everything. It did a new 5 minute high right there. It is on a good daily pattern. It's good on the 30-minute chart. It's good on all the charts. The next daily level I have, or the level I have, is the pre-market high. I should have just held it to the pre-market for the next partial, the high of the day for my third partial, and then just do whatever I do because there are no daily levels above it. So yeah, this is not bad, this is horrible, and the rest is fine. I mean, how much percent was your first partial? This was 20%. The rest were 10%. Do you think that the hammer from the 15-minute chart, I want to say earlier from the pre-market, possible going long if there will be a setup? This hammer right here, I did consider that. So at the beginning, when CCL opened this level right here at $14, I told myself that once it breaks $14 right here from the pre-market, this is the $14 right here, I would take it to the long side and I would put my stop loss right below this body of the hammer at $13.95. There it is right here. But then looking at the 1 minute chart, I didn't like that as stop loss. I just saw that it was going up from here. Yes, it will be breaking the $14, but having a stop loss within the 1 minute candle was a bad idea. And this would be like the closest support area I have, which is 15 cents. And 15 cents on CCL, I didn't want to have that. I'll have only 2 hours if it goes to 14.30. CCL doesn't move a lot. You could see here that on really volatile days when it's really moving a lot, it's barely making $1 move. So 30 cents on one move after it's making 30 cents wasn't a good risk to reward. So I just avoided the initial pop right here. You got in here low. That happens, totally fine. As long as you manage your trades well, that's still a good thing. So let's get back to the trade review. We have a little bit more left trades and I think we'll be able to go through them. This is for Brad. I do consider the pre-market definitely, Anton, but I also needed to form some good setup with the aftermarket open. I just tried to combine everything, and if it all lines up together, it's a good setup, but if it's not, I just try to avoid it. So let's see here, reversal on love. What happened there? So there it is, it's dropping down. Now this is one of the setups I wouldn't take. And guys, I told you about my rules. You could tell me why you wouldn't take this, and let me see what you did there. Thought process, you came back from lunch, so that love had a strong support at 2040 area. I see that. Missed your ideal entry at 28.58. Now yeah, this would have been like the perfect entry right here. This would have been the perfect entry. So waited for a pullback and went long on the way down. Now this is good. It's good that you didn't chase it here. You didn't chase it here. You got in at the pullback. That's smart. It was approaching the 50 moving average, get more confident in the trade when it broke the 50 and you held stop loss 2064. Wait, am I reading it well? Stop 2064. So somewhere around here, like exactly on a new 1 minute low. Profit target view up for 200 moving average 29. This is really good. You got more than 3 or 4 hours into it. Yeah, exactly. So I wouldn't take it for one reason. The 9 moving average on the way right here. So one of my rules is telling me never go against the 9 moving average on the 5-minute chart and never chase the trend or short it when it is extended from the 9 moving average on the 5-minute chart. So if you take it to the long side here, which was the ideal entry you mentioned, that would have been perfect. You'll have a tight stop loss somewhere down here, somewhere down here. You get in at a new 5-minute high and you could have the 9 moving average as your target. But taking it to the long side against the 9 moving average is something I personally wouldn't do, but I see what you saw there. It did break up, it did pull back, and as I told you, stocks usually love pulling back to crosses, and if they do pull back to the cross and hold it, it's not a bad setup to take it to the long side. You held it through the consolidation, and you held it to your target, which was amazing. The risk to reward was there, the entry was there for you, and you had a stop loss. So yeah, you managed it well. Now let's see. Valentin traded MGM. We're closing these guys. So you have a pennant right there. Entry failed pop up and rejection of the moving averages, breaking through the POC. Adjusted stop loss. Okay, see that. Now this entry, it wasn't bad. I could see why you took it. Look at these guys. MGM dropped a lot, pulled back to the 9 moving average in the 5-minute chart. You have those selling wicks right there, and then you take it to the short side. If I did that, or if I took this setup to the short side, what would be my stop loss? This exactly would be my stop loss. It continued consolidating, but you bailed on it once it broke the 9 moving average on the 5-minute chart. I personally wouldn't bail there. It's still in the range, right? This is the low, this is the high, and it's consolidating. Actually, I might have been a little bit scared or afraid of this one, because let me just zoom it in and show you guys what it looks like. You see this? You're having a new range right here. This is the high of the range, this is the low of the range, and since it broke the high of the range, I would expect it to go at least to the previous high right there. I usually trade these steps this way. I take it to the short side, similar to what you did there, and then I add right here and move my stop loss to the new high right here. Because of that, I usually get stopped out. Since you didn't add, or if I were here and I didn't add into this setup, I think I would have held it a little bit, at least to see what's going to do around the 50 moving average on the 1-minute chart. If it breaks the 50 moving average, now yeah, it would be most probably done, and I wouldn't hold it to my original stop loss. Suggestion for trade management: always adjust stops and give the play before has a chance to take out work for me. Yeah, this was good. I like how you saw the new range and how you built on the break of that range. But remember, the 50 moving average is a really strong resistance, especially on trends. And I know some traders who are getting into the 50 moving, who are waiting for stocks which are trending to get back to the 50 moving average, and once the 50 moving average gets held, they get into the position with a tight stop loss right on the 50 moving average. So just because of this, only because of the 50 moving average, I would have held into it or given it a little bit more room if I didn't add to this setup. But you still managed it really well. Now, did you re-enter there, or you just decrease your position? I can't see actually. I can't see a short. Okay, so this was, you decreased your position right there, and then you just start taking partials. Good job there, Valentin. Naeem, let's see what you did. Okay guys, we have a little bit more time left. I will go through 2 more trades. just because we're running out of time, but you can still send the rest of your trades on our next trade review, or if there is something important you want to discuss or you want to know, make sure to email it to me and I will definitely take a look at it. So MGM, you took this thing. This thing wasn't a bad short. It was strong in the pre-market, held the 200 moving average, tried to bounce out of it, failed the bounce, started doing a lower high wave, did a new 2-minute low. One reason which could have made me hesitate taking it to the short side is the horizontal moving average. I don't go against horizontal moving averages unless I see a descending triangle. If I see a triangle forming around the horizontal moving average, I might take it to the short side, but only for the first bounce or second bounce. I usually avoid taking those type of setups against horizontal moving averages. You took it to the short side. I bet this was your stop loss and you held really well. This was an amazing partial, like getting a partial on exit literally at the low. This was amazing. Good job. So J-Bone, let's see what you did. We actually went through this trade, J-Bone, and we went through this trade, and yeah, we didn't go through this trade. Perfect. Actually, we are on time. Perfect. So Oxy, oh, we went through this one as well. Hey man, but the ABC band, did you take it to the short side here, J-Bone? So look at this. This was a reverse ABCD pattern. I like it, but look at this. This candle closed so bullish, right? So strong. This is not a bad step. I like it. Dropped a lot, pulled back to view up, did a W shape right there. You took it to the short side, stop loss right there, exited right after the hammer, even without hitting the original stop loss. So yeah, this was really good. I see it on the 5-minute chart as well. Drop down, 2 dojis below view up, new 5-minute low. Actually, this was perfect. This was perfect, which is just didn't work out. Really weak, 50 or 60% retracement, maybe 40. I think it's around 40% retracement. 2 dojis, new low. Took it to the short side, got you stopped out. Just didn't work out. So yeah, J-Bone, this was perfect. Did you ever review SDC? Did you send something, Chuck? Maybe I missed your trade. I'm sorry about that. Let me check. J-Bone, then I can't see your trade on the off topic, Chuck. Someone else did. Can you please tell me the name? I don't know. Oh, I see that. Okay, sorry this. Okay, Afaf. Sorry about this. Let's check this last trade. This is my bad. I went through this one. No, it's totally fine. So SDC 1030. Let me actually open it here just to see bigger picture. SDC right there. Did they have good news today or bad news? Anyone knows? I didn't have this thing on my watch list. Good news. Yeah, looking at this, it's not actually bad. It gapped up today. It was strong in the pre-market. You could see here. It was strong on the 15-minute chart. Dropped down, and it started closing above the 50 moving average, doing higher low, higher low, higher low. You took it to the long side at 1031, somewhere right here. 1031, 32, 33. Yeah, this was your entry at 1032. Amazing. And you exited almost at break even. I see that you held it to 680 and it fell down. So yeah, this wasn't bad. It is a little bit choppy. I don't like the price action here. Like, look at these guys. You see, it's just choppy. It's doing highs, then it's doing lows, then it's doing highs, it's doing lows. It's forming some sort of pennant. I like that. And it did break it right here. It did break it right here. And that was your entry. So that was totally perfect. I like that. I'm not sure where you put your stop loss. If I get into the long side, I would put my stop loss right here, or at least right here. Take a partial at the daily level right there. You ignore the daily level. Remember, daily levels are there because they could act as resistance areas, right? So it would have been really good idea to take partial at the daily level there. but it's good that you still took some profits there and exited the rest closer to break even. So yeah guys, if I missed any trade, if you guys have any questions, make sure to send me an email. Thank you everyone for being here. Thank you for sharing your trades, winners or losers. And next trade review session will be on Thursday, 12 p.m. Eastern. I will still be in the chat room. You can always mention me there and ask me any questions. Guys on YouTube, thank you for sticking here with us. If you have any questions, you can always email me. That's my email down there. And talk to you or see you on Thursday. Roberto's, yes, I am trading after lunch. I'm trading sometimes even in the lunchtime if I didn't hit the goal or if I see a really good setup. But yeah, I trade the whole day. Bye bye.